Michael Angelucci with Level Financial Advisors is with us on the WBEN Live Line this morning. Michael, good morning. I hope you had a Merry Christmas and Happy New Year.
Good morning. I did, and I hope you did as well. Thanks.
Yeah. Final trading week of the year. I can't believe it's December 30th already. Where do investors stand in these final days of 2024?
Well, so far, the U.S. market is defined by the S&P 500, the 500 largest stocks, which is a good proxy for the market, is up over 25% year-to-date. So they stand pretty good. It is, 2.5 times larger than it normally is. Usually you could expect on average maybe 8 to 10% a year returns in the stock market.
I mean, 25% is, who wouldn't take that, right?
I would take that off every year, year after year. But unfortunately, we don't get that year after year.
Or even the choice, right?
Well, or even the choice. That's the problem.
It seems that lately the markets have been rocked by some losses. What's going on lately?
Well, I think a little bit of what's going on is really where inflation and interest rates may be going. The economy is strong, but there is some worry, especially after the Fed's last meeting, where they lowered their interest rate reduction plan for next year by about, I think they were predicting 4 or 5 interest rate reductions in 2025, and they said maybe there'll be 2. And the reason was because there is worry that the economy is still hot, employment is pretty good, and they're worried about inflation. Inflation hasn't come down as much. So there is worry that inflation isn't going to meet their targets as fast as they thought they would, and interest rates affect asset prices negatively. So traders had thought that interest rates are coming down faster than they would, or that now it seems like they will. So that made asset prices come down a little bit when interest rate projections were going up.
All right. Makes sense. All right. What you're talking there. We're almost at January and getting ready for a new administration. That transition word keeps coming up. What happens to markets during a transition?
Initially, you see markets generally respond favorably to a presidential change. They feel the markets know what's going to happen going forward, and they kind of then wait out and see what really happens. I think that's what's happening now. We had a positive bump after Trump was elected, and that was really around keeping taxes lower, which is stimulative to the economy, and deregulation, which is good for business generally. And so we had this stock market bounce. But now there's some worry in the markets that some of his other policies may be inflationary. So that gets to that point we just talked about, right? So now maybe inflation might dilute some of the projected growth from other policies. So you have this idea that some policies are going to create growth, but then maybe other policies could be inflationary, raising interest rates and hurting stocks.
We didn't really have a Santa Claus rally this year. I'm not sure if we always have one, but it's something that you hear about, generally toward the end of the year or the last month of the year. Is it possible we could see that around the transition?
It'll depend. I really think, and this is my opinion, I really think on some of the things he says and where his position will fall on deportations and tariffs. And the market after Trump was elected really felt was the term that is used as pricing in, meaning that they built in into the stock prices this idea that he wasn't going to be as heavy on deportation and tariffs as he campaigned on, but he's saying he's going down that road, and it looks like he's planning to go down that road. So now the markets are getting a little shaky. That gets, again, to that inflation idea that these kind of policies are inflationary. So it's really going to be, I think at this point, everything is, at least for the next few months, is going to be dependent on the president-elect's actions, and as he becomes president, what those those first few weeks of his administration looks like.
Okay. We're speaking with Michael Angelucci of Level Financial Advisors. Michael, here it is, December 30th, really, 2 days until the new year. Are there any financial moves that somebody could make for their personal finances today or tomorrow that would be for a tax benefit or a tax advantage?
For any sort of tax advantage, you still have for some people, if they're able to contribute to an IRA, they're able to do it up until the tax submission date later this year in April. So they can still do that if they want to save taxes on their income tax. But it's getting a little late in the year to do any sort of other changes. That, like I said, the benefit of IRA contributions, if you're able, talk to your tax person if it'll benefit you. And if you're able to do it, you've got a few months yet to make those contributions. But on the last couple days, you have very limited options.
It's kind of a weird holiday this year, right? Falling on a Wednesday, both Christmas and New Year's for the work, if you're working.
Yes, but I think with that, and it happens, right? We get these middle of the week holidays, and it disrupts things. And I think one of the things I read too, and I don't know how much it affected things last week, was during Christmas and afterwards. The trading volume was low, so a few trades on some larger companies really affected the markets last week when volume was down. So we may see that a little bit this week. But the big week usually is people are taking off Christmas week.
Yeah, sure. All right. Well, Michael, thanks so much again. I appreciate you joining me this morning.